Okay, you are welcome. As we continue looking into the components of smart money concept, today we are in number 8, liquidity. What is liquidity? According to Wikipedia, liquidity is the ease of converting an asset or security into cash, with cash itself being the most liquid asset of all. Then, as per trading, it simply implies either making money from the market or the market taking your money, meaning your money is gone for vanishing. Is that right? Everything is liquidity in trading. Stop loss, take profit, order block, trend line, this, that, name anything. Anything as much as trading is concerned, it's all about liquidity because nothing in trading is 100%. With that, meaning there will be losses, there will be winning. The most rewarding strategy is also liquidity. You know, there are a lot of strategy, this, that, price action, smart money concept, name it, any strategy at all. It's all about liquidity also because without liquidity in the market in the first place, the market cannot move. The market cannot move. There will be no movement, and when there's no movement, there's no money. When there's no money, you cannot make money from the market. As such, liquidity is everything is liquidity. As such, nothing is immune to have losses and winnings as regarding trading. You cannot say, this my trading is immune to losses, and you can always be winning. You will make some losses, you make some winning, but the aim of every trading and trader is to be able to have more winning than the losses at the end of the day. You only have to find your trading edge and what actually works best for you. To understand and find liquidity points in smart money concept. In fact, to do anything when trading smart money concept, always first mark out this market structure and take note of the point or price of interest, commonly referred to as POI. Now you may want to know how to identify liquidity when liquidity has happened. First thing first is when any POI is swept with candlestick wick. Number 2, when a particular buy or sell criteria for phase, either with candlestick body closure or with wick. We are going to go into this in depth to understand what it is all about with a line diagram. In the first example here, we know anything we want to do in this market, in as much we are using smart money concept, we first of all mark our correct market structure. You know, market was making impulsive move, corrective move, impulsive. In the third corrective move, the second corrective move, price take out inducement, break of structure, inducement again, making this type of another impulsive move, corrective move, take out inducement. When inducement is taken, this high is now confirmed, then this low is also confirmed normally. Then what we are looking for here is to look for a buy entry, either after taking out inducement or when price tap at this other block, right? If there's another block there, when we get our entry modules, you will get to know that better. And this is an example of a bullish market. Now let's also look at identifying liquidity. This is first of all the structure. We have already marked it out. Now many people want to buy here, and this is a very good setup. You can buy from this place, but you notice when you buy, the market can just come, probably fake you out, pretend that you want to buy, and before you will see a very strong wick that will take you out, that will take your money. Because when you buy in this place, when you put a buy order here, with the mindset that your target will be what will be at this recent high point that has been confirmed. With that, you put your stop loss below the low point, right? But you will realize that price will just come, make a little reaction, go up, and then it will take you out. This is what we call structural liquidity, because this is a confirmed structure, And what type of structure is this? This is a bullish structure. The price is making an upward movement, and then you have to buy with the trend, right? But you are bought with the trend. Nonetheless, price did this thing, and then you have a losing trade. This is a loss trade. And what happened here? This is what we call market structure liquidity, or you can call it structural liquidity. That's one way to identify liquidity. Now there's another way to also identify liquidity. This, like this stuff I marked here, how do you notice what we call POI liquidity, point of interest liquidity? What I mean by this is when price is making this type of structure, impulsive, corrective, impulsive, the next corrective move, inducement, right? And then when this up is this high point is confirmed as high, price went to that place, the next thing that people want to do, there are some people here that normally they don't know anything about smart money concept. They will say, okay, because there's usually another block that will be present here, right? Another block will be here, call it OB. There are a lot of people that want to sell. There are a lot of people that want to sell the market here, that they want to sell it downward. By so doing, you'll see price will just come, take them out. When price take them out, you see there's a wick here. Most time they will be weak, but what we're expecting price to do is price to come, take this adjustment, go up with a candle closure, right? That's what we want price to do, so that here will not be our valid break of structure represented with B, right? That's what we want. But sometimes price may not close above it with candle closure. You will just see this type of structure, like there's be a wick. Then we have to be patient for price to print out another candlestick that the previous week will now, the candlestick body that will be printed next will be able to close above the wick of the previous candle. When we'll get into more practical case study, I believe you'll be able to get this more better. Okay, like 99% of the time, this type of structure will always fail. The only time that you can have probably 50% or 30% chances of this playing out is when you are working on higher time frame, like maybe weekly time frame. You see that this type of structure. And then people want to buy here. There may be a little buy in this point, but that little buy, when you get to maybe 4-hour time frame, the lower time frame of a weekly time frame, you will see that you can see a little buy action there, probably before price will continue to go down. Okay, so this is all about liquidity. This is how liquidity operates in the market. There are sometimes price will also close below this point with candlestick body closure. It's also point of interest liquidity. Okay, all these things we apply it more on the real chart. You can take some pictures of this to memorize probably, and then the more we study about the chart, the more you will see and get to understand it more better about liquidity. So know that everything in the market is liquidity. All we want is to be in a better position to make good use of this very good concept. Thank you very much.